Insurance costs are skyrocketing in regions with high climate risks, leaving many homeowners struggling to afford coverage. But what's really behind these rising premiums? And how is it affecting your wallet? While extreme weather events are often blamed, the truth is more complex. Inflation has reached levels not seen in 40 years, significantly impacting rebuilding costs after disasters. Between 2017 and 2022, home insurance premiums rose 40% faster than inflation, placing a substantial burden on households. Fraudulent claims and an overburdened legal system have also driven up costs for insurers, particularly in states like Florida and California. These expenses are inevitably passed on to consumers through higher premium rates. Regulatory constraints that suppress insurance rates can deter private insurers from operating in high-risk areas. This has led to a shift of risk to state-backed programs, which face their own financial vulnerabilities. The impact on homeowners is severe, especially in climate-vulnerable areas. Counties in the top fifth for climate disaster risk saw home insurance premiums increase by 22% in just 3 years. For those in extremely at-risk regions, private insurance may no longer be an option at all. Rising premiums have placed homeownership out of reach for some and forced others to forego insurance coverage altogether. Nearly a third of natural disaster-related losses in the United States now go uninsured, leaving families exposed to financial devastation. In response, the insurance industry has emphasized the importance of stronger building codes, environmental mitigation, and disaster resiliency measures. These proactive approaches can help stabilize the market, but require significant investment and planning. Government insurance programs have expanded as private insurers retreat. However, the sustainability of these programs remains questionable, as they often rely on surcharges to stay solvent, placing further burdens on consumers. Environmental and housing experts advocate for rethinking where and how homes are constructed, limiting development in high-risk areas, investing in natural infrastructure like wetlands, and enforcing stricter regulations on rebuilding practices could make insurance costs more manageable in the future. The challenge of rising insurance costs in high-climate risk regions requires urgent and collaborative action. Long-term solutions lie in addressing the root causes of risk and market instability. Homeowners and insurers alike stand to benefit from investments in strong building practices, disaster mitigation, and smarter development policies. Individuals can protect themselves by retrofitting homes to reduce vulnerability and exploring resilient features that could lower premiums. Governments and communities must work together to shift away from unsustainable models, focusing resources on prevention rather than reconstruction. Without decisive action, the burden of rising insurance costs will continue to weigh heavily on our most vulnerable communities. By applying these insights today, we can build a framework that safeguards homes and lives while ensuring the longevity of the insurance market in an era of unprecedented climate challenges. Thank you so much for watching Insurance News with us. If you found this helpful, don't forget to hit that subscribe button and stay tuned for more updates on all things insurance. We'd love to hear your thoughts. Do you think rising premiums are linked to climate change and legal changes? Share your perspective in the comments below. Thanks again for joining us, and we'll see you next time.